You're in the Business Insurance Zone with me, Steve Savant, national insurance columnist and financial color commentator. And with me today, my special guest, Tom Hegna, author of the #1 Amazon.com in the financial section, Paychecks and Playchecks.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm Steve Savant, your host. We're broadcasting live to a nationwide audience of financial advisors right out of Fountain Hills, Arizona, right here, home of America's largest fountain. And with me today, author and Major League international speaker, Tom Hegna. Welcome to the show. And you've been here all day, all week. I have to say, 5 days with Tom, mind-blowing. And if you've seen him, maybe you've seen him at ALU or MDRT and all the places he speaks at. But now I want you to go out and buy that book, www.paychecksandplaychecks. And we're giving away a 20% offer to coupons for all of our. You should read this book because I promise you there are about 4 to 5 closes, some of them we're going to talk about today, that you'll see in this book that I have not heard in a long time. I just came off one of the forums about 2 days ago that had the 36 closes, the top 36 closes. None of them were product. Not one. I have several product closes in here, which I think you'll find, you'll say, Steve, those are unique. I believe that. Tommy, let's talk about it. We talked about RMD land on the second half of Thursday's show, and if you missed our show, again, I say go all the way out and watch Monday's show all the way through because I think you're going to get a lot of it. Remember, they're only 15-minute shows, so you can get in and out of it. www.brokersalliance.com. Just come to our homepage and click on the on-demand section. Yesterday, on the second half, we talked about RMD maximization and RMD compression. You say, what's that, Steve? Well, just watch Thursday's show. But today I want to talk a little, we touched on it just at the end, explain a little bit about RMDs and Roth IRAs.
Yeah, so, I mean, I converted my IRA to a Roth. I mean, if you look at the financial condition of this country and you look at how much the debt and deficits are growing, I mean, we're $15.4 trillion, it's growing every single day. Doesn't matter if you're Republican, Democrat, this should be an American issue. We got unfunded Social Security obligations, Medicare, Medicaid. We're talking, Business Week said $213 trillion of unfunded obligations. Now, there's only 2 ways to fix it. They're going to have to cut spending and they're going to have to raise taxes. So if you believe that they're going to raise taxes, that lends itself to the Roth IRA. Why would you not pay tax today? Oh no, you don't want to pay tax when you could pay at 20 or 30 or 35. No, you're going to wait till it's 40 or 50% to pay. So I converted my IRA to a Roth. I pay my taxes now, and when taxes go up to 40, 50%, it won't bother me because I get to take that money out tax-free. And the big deal with Roth IRAs is there's no required minimum distribution.
Wow, that's huge.
There's no requirement to take that money out.
So it may be worth it to really relook at, because, you know, basically we thought the Roth conversion issue has already been done. Pretty much anybody who was going to play did it. But now maybe this is another second look at this.
Absolutely, and I'd say look at Ed Slott's stuff. You know, Ed Slott's a famous CPA, and you can Google him and get his stuff. But there's a great reasons why people should still be converting to Roth IRAs. Absolutely.
Yeah, especially what you said. If you think that, I mean, tax revenue is going to have to go up.
The math says it's got to go up.
Okay, so I say, hey, pay now or pay later. Let's pay now.
Right.
That could be it. Now, the other alternative, and I want to go, before we get into the big one I want to talk about today, is this is a surprise because I don't think people use this. Now, I have been using this, and some of our producers are already in this game, but I would say the vast majority of producers that we talk to are unaware of this tactic. And I call it a tactic because there are several ways to use RMDs. We've named a couple of them yesterday, one today. But this issue of taking your RMDs and using it, especially when you don't, what if I don't need it though?
Right.
Tommy, I'm being forced by the government to take mandatory distribution. I don't need it. What can I do with this to maximize the bang for the buck money coming out?
Yeah, well first let me be clear. In the book I tell people you don't owe your kids a penny of your IRA and 401k. I mean, you saved it for your retirement. I tell people go on and enjoy it in their retirement. But the fact is some people won't. And they will say, well, I want to leave it to my kids. Well, you don't really want to leave your IRA money to your kids because they're going to get hammered in taxes. So the best way is to take your RMDs, and if you use the RMD maximization strategy that we talked about yesterday, you get more RMDs and you get the money from the the insurance company to actually pay the taxes. But then you take that more money and you buy life insurance with it. And if every year you paid for life insurance, then when you die, that money can go to income, and if you set it up properly, estate tax-free to your family. So instead of leaving your kids a big tax burden with an IRA, use your RMDs to pay for life insurance. That's a great combination plan. And I talk about that in the book, and I talk about the strategies of RMD maximization. Gives you actually more money for the premiums, so you can sell a bigger life policy.
And remember, yesterday's show, I think you laid this out really well, and maybe someday we should do a show just on this tactic by taking your RMDs, using a SPIA, a single premium immediate annuity. That now is going to be a bigger number than than the RMD would have delivered by itself. I now have space to pay any taxes due, and I might have space to pay life premium, and that premium, or the death benefit generated by the life insurance premium, will go to your kids tax-free, and you still get to keep your income, which you are, and I'm telling you, Tommy said it Tuesday, you're going to need it. You're not dying. Medical technology being what it is today, I think you're going to start thinking about adding another if you're healthy at all, you're going to be adding 4 or 5 years on whatever the tables are today, maybe even greater. I saw an article, just as a shock and awe for a Friday show, I saw an article that says a person that's going to live 150 years has already been born on the planet. I mean, that's shocker. So when we talk about it, RMDs buying life insurance, but you also said long-term care. And you are one of the biggest, I've never heard anybody go off on the subject of LTC, because you say it's such a risk.
It's a huge risk, and I have a whole chapter in the book. The chapter in the book on long-term care is called What's Your Plan? Because here's what I do. I always brag about my plan. My plan is I never have to go to a nursing home. I get to stay in my house till the day I die. The nurse has to come to me, and my favorite part, Steve, is I get to pick the nurse. And what I call long-term care insurance is anti-nursing home insurance. I get to stay in my house till the day I die. You need money to pay those premiums. RMDs can help fund those long-term care premiums.
Well, I think everybody that's watching the show really enjoys your policy to say, I can choose my own nurse. I love that. Hey, when we come back, you've been listening to the Business Insurance. When we come back, we'll talk more to Tommy. You can watch this show and all our shows at www.brokersalliance.com, and you can write me, The Biz, at Brokers Alliance. And remember, we come back, we'll talk more.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Companies in our business are always touting service, products, and underwriting. And we do that too. But here's the difference. Now enter the world of the elite producer with a value package that cuts us out of the pack. A BD that approves social media marketing of non-FINRA products and doesn't take an override. With the best competition desk in the industry, and for our loyal producers, a true group health plan. No one offers that. Brokers Alliance does.
Well, welcome back to the Business Insurance Zone. You're listening to me, your host, Steve Savant, with us today. Tom Hegna. Just before we went to the break, we were talking about RMDs for LTC. Now, I know that we talk too much in acronyms. I mean, we do. Our industry's packed with them. So, required minimum distributions for long-term care. Touch on it. Let's clean up that part of it, and then I want to get to our main part for this segment.
So, in the book, I talk about a lot of risks, and there's longevity risk, which is the #1 risk, and inflation, which is another key risk. But the other key risk is long-term care. I think it's the one thing most seniors don't cover that can wipe out their entire life savings. Think about it. What else have you not done that could wipe out your entire life savings? And some people say, well, Tom, long-term care insurance is too expensive. I almost want to go through the roof. When somebody says long-term care insurance is too expensive, I say, oh, try not having it. Try not having it. In fact, I give a homework assignment whenever I give seminars or training, and I say, look, I'd like you each to go to a long-term care facility or assisted living facility. And when you're walking through the halls, ask the families, how's this working out? How are the finances working out? Are all the brothers and sisters getting along? And what you're going to find out, it's not working out. And those people would gladly, happily pay 7 times whatever the premium is that your client thinks is too expensive for long-term care. They would happily pay 7 times that because long-term care, an unplanned long-term care event can wipe you out. It's something we got to talk to every client about. It's required. If you're going to retire successfully, you have to have long-term care insurance.
Okay, you heard that from Tommy, and Tommy's not really an LTC guy by heart.
No.
I mean, really. But
The math and science says it's a risk you got to take off the table.
Well, let's talk about another thing, because to me, we just came out of the worst bear market in our lives, the second worst in United States history.
Yep.
And the last 10 years, 4 of those 10 were brutal.
Right.
And it was not, I want to know what's the next line up from bear market. Is it like grizzly market, grizzly bear market? It was the worst. Talk about bear market recovery, because there's a tactic in your book that you referred to on this that I think is pretty unique.
Yeah.
And how can we recover from this?
Yeah, so I have a story in the book of this 75-year-old couple. And for years, they'd done well in their brokerage account. It went from $200,000 to $300,000 to $400,000 to $500,000 to $600,000. Then the bear market hit, and all of a sudden, their $600,000 went down to $400,000. They picked up the phone, they called their broker, they said those famous words, "Get me out."
Right.
And it doesn't matter what I say, it doesn't matter what you say, they're not going back in. And so now they call their banker. Banker's going to give them 1%, so $4,000 a year. They said, don't spend it all in one place, you know. And they're frustrated and they're angry. They wanted this money for their retirement. They wanted to take care of the kids. But on the way out the door, they call one of your advisors, and one of your advisors said these words: "We can fix that. We can fix that." And they showed the $400,000, keep $100,000 liquid, put $300,000 into a joint lifetime income annuity. It's going to guarantee income of almost 6 times what the banker was going to get them for the guaranteed for the rest of both of their lives. And if one of them lives to be 100, it's going to give them the $600,000 they had at the top of the market. But now the guy says, "Well, I'm not feeling real good. I don't think we're going to hit 100. You know, she's not feeling good either." How can you guarantee it? If you put that whole $400,000 into a joint life with 30 years certain, the guaranteed payments on that contract are over $650,000, more than they had at the top of the bull market.
Now that's, but now you've done 30 years certain now. So if they did by some chance live past that, they got an issue then.
No, it's life with 30 years
All
certain,
right,
joint
okay.
life. But here's the point: they're 75, so it's unlikely they're going to live
Sure.
past the 30 years. But even if they were both killed in a car accident tomorrow, their kids get the $650,000. That's more than what they had at the top of the market. So here's what I say when I'm training: I say, hey, can the banker guarantee all the money you lost in the market? No. Can the stockbroker do it? No. But the life insurance industry can. Now, it's spread out over time, but
Sure.
but you're talking about these conservative people. How many people would, if you gave them right now the opportunity to go back in time and get what they had at the top of the market, how many people would get in that time capsule and go back?
They'd go back.
Every single one of them. And we give them a chance to get in a time capsule and go back. Now, we spread it out over time, but they can get that money back.
When I think about bear market recovery, a tactic that Tommy's really put together, and I also like your joint. Listen, I'm still back 2 shows. On Wednesday's show, we're talking about putting it on mom and the child. I think that's huge. We need to look at every single angle on this, because I believe we have a brand new market. This is like going back into retirement modeling, and everybody says, "Oh, I know what retirement modeling is." Well, maybe you don't.
Right.
And with Tommy's book, Paychecks and Playchecks, I think you're going to find you're saying, I kind of knew this, but if this is a redux of something that's so solid, I think you're going to find, wow, this is going to help you build out your practice. And if you want to major in retirement funding, this is the book you got to read. Tom, talk a little bit more about, when I'm talking about bear market recovery, and I am recovering, let me tell you. I don't know about you, but I took a hit, and I want to recover. And so you're saying maybe I should start looking at this joint tenancy with my wife, for my case, for SPIA, for money, so I can get way more than I am.
You may be a little young for this strategy. This strategy was on a 75-year-old couple. It works better the older, because there's more mortality credits. But for you and your age, that's the reason why people should be in variable annuities. I'll give you a quick story. I was in San Antonio, Texas, I was called in on a case, guy had $400,000, and the agent was proposing a variable annuity with a guaranteed minimum accumulation benefit rider. Well, the client kept saying, "Oh, the fees, and Vanguard's fees are so much lower." So he ended up going with a Vanguard mutual fund instead of putting it in the VA, where he'd be guaranteed he wouldn't have less than what he put in. Well, a year later, it's $400,000 down to $200,000. I told the agent, I said, "Give him a call. Ask them how those low fees are working out." See, what a lot of people don't realize is that it's not about the fees. It's about where can you get the most, lose the least after fees. It's about which gives you the best value. And I would say that's the argument, that the variable annuity is the best value. It's not the lowest cost.
Well, you've been listening to Tom Hegna, 5 days on our show. You can watch this show, all our shows, at www.brokersalliance.com. When you go out to it, just click on the on-demand section. You've been listening to the Business Insurance Zone. That's the buzz on the biz for today. Get in the zone. The Business Insurance.
The Business Insurance Zone is produced by Brokers Resources Audio Video Online, the media division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.